Check the mic and make sure it sound right, boys.
Just finished backtesting Cypher patterns on the dollar Canada pair on the 4-hour charts. There was a 10-year backtest that I completed from 2012 to 2021, and I wanted to share the results with you. The parameters for the test were the traditional setup for the Cypher pattern. If you don't know how to trade the Cypher pattern, I have a training video on that on my channel. I'll leave a link to that below. Basically, once you have the pattern set up, the stops I chose for this back test were a Fibonacci extension from A to X, back down in. Stops were at a 113. Targets were conventional targets. Fibonacci tracement from C to D. Target 1 at the 382. Target 2 at the 618. Once target 1 was hit, I would take the other half of the position, roll that stop to break even, so then we're in risk-free trade, and then either you hit target 2 at the 618 or it goes back to break even and you get stopped out for a break even trade on the second one. So I wanted to share the data with you on that. And the traditional conventional targets were not that good. So what I also wanted to share with you is how I fixed that. And there's a kind of lesson in here, just because, you know, a system is taught a certain way or strategy is traded a certain way doesn't mean that that's how it has to be done. If you notice something you want to change, you can do that. So the traditional conventional 113 with the conventional targets had a 65.9% win rate, target 1, and had a 29.3% win rate, target 2. 36.6% of the times the trades got stopped out for break even. That's what I was talking about, where we hit target 1, see how the market rolls up, drag our fibs along, we hit target 1 at the 382, second position would get moved to break even, we got it stopped out at break even for the second half of the position. So that's where the even comes out. Over the 10-year period, like I said, was not great. We had 13 total pips for the 10-year period, so just about break even over the 10 years. Target 1 was at 130. Target 2 was unprofitable at negative 117. And since you're taking half a position on both of these, you would really end up with half of this 13, which is 6.5 pips for 10 years, which obviously is not profitable once you factor in spreads, commissions, and all the financing stuff. So one thing I noticed was if you hit target 1 and then roll stops to break even, so you could see the market, this was our entry, we got in, the market rolled down, hit target 1, but then rolled back up, stopped us out for break even, and then rolled over again to hit target 2. And I noticed that happened in a lot of the trades that we took. So I thought, you know, how do we fix this? Do we need to roll stops? Is that helping? Is that benefiting us? What if we just took one position at the 618? So I back tested that as well. The results for that were much better. Instead of coming out with the 13 pips for the 10 years, half the years being negative, you can see over the 10 years, the ones in red were unprofitable. With a straight up 618 target, we reduced our unprofitable years by 2. So we had 7 out of 10 years were profitable for 70% profitable years. And we increased our pips from 13 to 539, which is much better than it was before. We had 11% yield versus the negative yield for the conventional targets. And that 618 hit at 61% with a risk reward of just over 1.08. So we had pretty much 1-to-1 at a 61% hit rate, which came down to this 539 point pip increase basically over what we had before. So the lesson here, like I said before, is, you know, backtest the conventional way and what's taught, but also, don't just run through the backtesting blindly, make observations, maybe look at the RSI and notice what that's doing, or maybe, oh, if I extend my targets, is that going to help? Or is my stop way too high out and it's not really hitting that? Maybe we can shorten our stops and increase our risk reward that way. So when you're going through back testing, just make sure you're taking observations, and if something you test isn't profitable, maybe you might see a way, like I did with the 618, to kind of turn that around. And if you need something to backtest with, if you want to use the spreadsheet that I use, I'll leave a link down to that in the description below. So good luck, good trading, and I'll see you in the next video. Thanks.